Are you ready to purchase your first home in Canada but feeling lost in the mortgage maze? Stay tuned because in the next few minutes I'm going to share with you the top tips every first-time homebuyer in Canada needs to know, from saving for a down payment to avoiding hidden costs. We have you covered here. My name is Dillan Kelly and I'm a mortgage broker here in Canada. I've been in the mortgage industry since 2014 and licensed in Alberta as a mortgage broker since 2015. Today we're diving into some essential tips for a first-time home buyer. Buying your first home can be exciting but also a bit overwhelming, so let's make the process simpler for you. Tip 1, saving for a down payment. In Canada, you'll typically need at least 5% of the purchase price for a down payment unless your purchase price is over $500,000. If that's the case, you will have to put 10% down on the additional funds over 500. Unless it's over $1 million, you need 20%. But aiming for 20% to avoid mortgage insurance premiums is always preferred. On a $400,000 mortgage with 5% down, a mortgage insurance premium will be around $15,200. Tip number 2, know your credit score. A good credit score can not only get you a better mortgage rate, but also greatly increase your chance of approval. You can check your credit report for free through various online services like Borrowwell or Credit Karma. Some banking institutions will give you free credit reports right on the online banking as well. Your score only technically needs to be 600 to be approved for a mortgage with less than 20% down, but I suggest getting your credit score up above 660 before considering applying for a mortgage. With 20% down, there's a little bit more flexibility in regards to credit scores, as you don't have to go through mortgage insurance. I'll be releasing a video next week on how to increase your credit score, so check out that once that comes out. Tip number 3, getting pre-approved. Getting pre-approved will give you a much clearer idea as to how much you can qualify for, as well as what you can afford. We want to know the monthly payment so you know how to budget for the potential future mortgage you're getting. To get pre-approved, you'll need to provide your lender with some financial information, such as income documents, debt proof in a form of a credit check, asset list, among other things. You can start your pre-approval today by clicking the link below in the description. Tip number 4, understanding your mortgage options. There are various types of mortgages available in the market, like fixed rates versus variable rate products, length of term matters, amortizations, payout penalty structures if you were to pay the mortgage out early, or prepayment privileges if you're wanting to pay down the mortgage quicker but not off completely. Each mortgage lender and option has its pros and cons. Speak with a mortgage broker like myself to determine which option best fits your situation. Tip number 5, don't forget about closing costs. The closing costs can include legal fees, home inspection fees, appraisal fees, title insurance, other disbursements at the lawyers, potential land transfer taxes depending on the province you're purchasing in. You have to budget for these additional expenses to avoid any surprises at closing time. I typically tell my clients to save an additional 1.5% of the purchase price for closing costs to be safe. Alberta does not have land transfer tax, luckily for us. If we did, I would tell my clients to probably save closer to 2 to 3%. And there you have it, 5 essential tips for first-time homebuyers in Canada. If you found this video at all helpful, please give it a thumbs up and subscribe to my YouTube channel for more home buying tips and mortgage advice. If you have any questions, feel free to leave them in the comment section below, or if you have any topics you'd like me to discuss, I'd be happy for that feedback as well. Thanks for watching and happy house hunting.